Welcome back to I Am Crypto. Today, we have a fascinating topic to dive into. We're exploring the intersection of national debt and cryptocurrency, specifically why the United States' whopping $35 trillion national debt could actually be good news for Bitcoin. Sounds intriguing, right? Let's get started. First off, let's get the facts straight. The U.S. federal government's outstanding borrowing has now reached an eye-popping $35 trillion. Yes, you heard that right, $35 trillion. To put that in perspective, that's more than the GDP of many large countries combined. Historically, rising national debt like this has led to increased inflation and eroded confidence in traditional fiat currencies. But we're not living in any old historical period, are we? Welcome to the age of cryptocurrency. Rich Rosenblum, co-founder of the trading firm GSR, shared some insightful thoughts with Decrypt. He pointed out that the global surge in debt, and what he describes as a debt trap, is actually beneficial for Bitcoin. You see, when investors sense instability in traditional financial systems, they start looking for alternative stores of value. Traditionally, this has been gold, but in today's digital age, Bitcoin has earned the moniker digital gold. The fact that much of the world has ballooning debt and is arguably in a debt trap is the part that's really good for Bitcoin. But why Bitcoin? Well, unlike fiat currencies that can be printed at will, Bitcoin has a decentralized nature and a limited supply of 21 million coins. This scarcity, combined with its decentralized structure, makes it an attractive hedge against inflation and currency devaluation. So, when traditional financial systems show signs of strain, Bitcoin starts to look pretty appealing. Now let's not get carried away. Rosenblum himself cautions that just looking at the rising national debt doesn't give us the whole picture. He highlights the importance of considering debt to GDP ratios, interest rates, inflation, and consumer expectations. Speaking of GDP, let's look at some recent data. The U.S. real GDP in the second quarter of 2024 grew at an annual rate of 2.8%, up from 1.4% in the first quarter, according to the Department of Commerce. That's a healthy growth rate for a developed economy like the U.S. real GDP, for those who might not know, adjusts for inflation and measures the value of goods and services at constant prices. So 2.8% growth is nothing to sneeze at. However, while the economy is growing, the debt-to-GDP ratio remains high. It reached its peak in the second quarter of 2020 at a whopping 132%, but has since slightly decreased to 122%. According to data from the St. Louis Federal Reserve. Even with economic activity outpacing debt growth, high debt levels pose significant challenges. They limit the government's fiscal flexibility, potentially increasing borrowing costs and reducing its ability to respond to economic downturns or emergencies. This is especially critical as we approach the U.S. presidential election in November. High national debt also affects the purchasing power of the U.S. dollar. If the government resorts to printing more money to service its debt, it could lead to inflation. More money in circulation without a corresponding increase in goods and services means higher prices, which diminishes the dollar's purchasing power. So, what does this mean for Bitcoin adoption? Jeff Yu, CEO of crypto asset manager Monochrome, explains that as national debt soars, people and institutions might reconsider what is traditionally deemed risk-free. They're re-evaluating their portfolios and looking at alternatives like Bitcoin. When traditional risk-free assets like fixed income are backed by a currency engineered to depreciate at an unprecedented pace, investors are reconsidering their risk-free status and look towards alternatives like Bitcoin, which offers a strategic asymmetric return profile in a diversified portfolio. In other words, as confidence in traditional financial systems wanes, Bitcoin's unique attributes make it a compelling alternative. Its limited supply and decentralized nature mean it isn't subject to the same inflationary pressures as fiat currencies. Investors are starting to see Bitcoin as a strategic asset that can provide asymmetric returns in a diversified portfolio. So, where does this leave us? The rising U.S. national debt is a complex issue with far-reaching implications. It poses significant challenges for fiscal policy and economic stability. However, it also presents opportunities for alternative investments like Bitcoin. As traditional financial systems face increased pressure, the case for Bitcoin as a hedge against inflation and a store of value strengthens. But let's not forget, investing in Bitcoin and other cryptocurrencies comes with its own risks. The market is highly volatile, and prices can fluctuate dramatically in a short period. So, while Bitcoin might be a good hedge against inflation for some, it's essential to do thorough research and consider your risk tolerance before making any investment decisions. And that's a wrap for today's deep dive into why the US $35 trillion national debt might be good for Bitcoin. Hit that bell icon to stay updated with our latest videos. And as always, leave your thoughts and questions in the comments below. We'd love to hear from you. Until next time, stay informed and stay curious.